Hello everyone, welcome to Moneycontrol. The stock of the day today is Dalmia Bharat, which is one of the leading cement manufacturers operating in the central as well as southern markets. The company recently came up with its quarterly performance for December quarter, and it turned out to be a big beat both in terms of the top line as well as on the margins front. For the revenues, the company's revenues grew by almost 23% year-on-year thanks to a healthy combination of both higher volumes as well as realizations. Volumes for the quarter in fact came in at 6.3 million tons, which represents a growth of almost 11% year-on-year. Realizations also grew at a similar pace of 11% year-on-year, primarily aided by the steep price hikes which the company put across in the eastern markets. On the margin front, the company, however, continued to face challenges in terms of the higher power and fuel costs, but managed to grow its margins on a sequential basis by 650 basis points. This was primarily aided by a combination of healthy realizations as well as some receding cost pressures. Raw material prices kind of softened in the quarter gone by. That, along with some cost control measures, really aided the margin profile of the company on a sequential basis. The average power and fuel costs, however, continued to remain at elevated levels and stood at almost $190 per ton in Q3, which is like a slight discount to what it witnessed in Q2, which was hovering around $150. Well, at present, the company's average fuel costs are hovering in the range of $175 to $180, which should translate into cost savings of almost 100 to 150 rupees per ton in Q4. On the realizations front, the company is actually facing some challenges in terms of the uptick in prices, primarily due to the competitive intensity in the industry, as the company's leading players in the market are currently under chasing volumes front. So there has not been a seasonal uptick in prices despite the start of the busy construction season, which usually happens from Jan to June. On the demand front, however, things appear fairly promising, as the government has outlined a capex of almost 10 lakh crores of capital expenditure in FY24, which it announced in budget recently, which should again translate into higher volumes for the overall industry and Dalmia Bharat as well. Well, the Dalmia Bharat has also undertaken a very strategic initiative of acquiring the cement and power assets of JP Associates, which is a capacity of almost 9.4 million tons in the central region. Well, this acquisition not only diversifies its presence away from the southern as well as the eastern markets, but also gives it a headroom in terms of the capacity to grow the business in the central market. On the organic basis, the company's expansion plans currently remain on track, and the business should be able to achieve a capacity of almost 49 million tons over the course of FY24. The balance sheet again is in pretty decent shape, as the company generates very healthy cash flows, and the capex intensity for FY23 as well as FY24 is pegged to be in the range of 3,000 to 3,500 crores. But Dalmia Bharat is undertaking a lot of structural initiatives to grow the business both on an organic basis and the inorganic basis, which continue to remain very positive from a long-term perspective. Investors can therefore keep the stock on their radar for accumulation.